Hi, I'm Norman A. Hood, financial advisor and host of the Exit Plan Show. I interview America's top advisors to help business owners enjoy more personal freedom, grow their companies faster, and transition ownership seamlessly when the time comes. Today's guest is Hewes Hall. He's with Lazarus Capital Partners. Welcome to the show, Hewes.
Thank you, Norman. It's great to be here.
Yeah, nice to have you. We're going to start out. I'm just going to have you tell our audience a little bit about your background and your career path up until now.
Sure. I'm with Lazarus Capital Partners. We are a small private equity shop acquiring control positions in typical LBO type businesses, which would be manufacturing, value-added distribution, and also industrial service. Okay. We focus primarily in the geography of the southeastern region of the U.S., as well as up the Atlantic seaboard to the extent of, say, North Carolina, Virginia, as well as a couple of recent investments in the Midwest.
Okay.
We try to stay away from certain things like most people do. We stay away from software, and we stay away from healthcare.
Okay.
For no other reason than that's not necessarily our bailiwick.
Okay. You and I just met. How do you think the people that know you the best would describe you personally?
I would probably say determined and competitive, but at the same time encouraging and fairly easygoing.
Okay. As far as Lazarus Capital Partners, can you tell us a little bit more about the firm?
Sure. We started back in 2004, and we started really as a result of we worked, a partner and I, my current partner and I, worked for a captive private equity group that was winding down. And so we had to figure out another way to stay in private equity, and so we raised a small amount of money. And we had just enough money to do some turnarounds. As you know, turnarounds are cheaper, but they're also dirtier. A risk is there for the reward if you're willing to take the brain damage, and we were. And we had enough success that we were able to raise another fund in 2011 or 12, I can't remember the exact time. We don't do turnarounds so much anymore, even though we've kept the name Lazarus Capital, which implies turnarounds.
Yeah, I wondered that.
But we do. We will look at turnarounds. We look more at what I think of as fixer-uppers. It's not so much a knock the house down and start all over as it is maybe go and fix the walls up, put another coat of paint on, and work on some of the rooms. We also look at performing businesses. As we've been successful, what share of success we've had, we've been able to move up that performance range and spend more of our time on growth as opposed to survivability or profitability. And that's really how we look at things in our shop. We look at three stages. We look at, is it survivable? And that's oftentimes at issue in a turnaround. Sometimes at issue in a fixer-upper, but more often than not in a fixer-upper, profitability is the issue. And then thirdly, growth. And having focused on all three of them, I can tell you resoundingly that growth is the most fun.
Okay.
Survivability is not.
Okay. What do you think? Is there anything that differentiates you from other private equity groups?
Absolutely. Because we focus on the lower end of the middle market. And when I say the lower end of the middle market, that means different things to different people. To us, it means revenue. Some people talk in terms of check size that you write. We don't really think of it that way. We think of it in terms of revenue, because the problems and the things that are unique to a business at the lower end of the middle market really are a function of their revenue.
Okay.
It's we think of it $5 million in revenue, which is tiny, and really that's a catch-all for us. We'd really rather catch them about 10 to 20 million in revenue.
Okay.
We spent most of our time focusing on operational issues inside of that kind of 10 to 20, which also happens to be just below most of the thundering herd of private equity.
Right.
And so we spend a tremendous amount of our time focusing on operational improvements, constraints in the business, and not necessarily manufacturing constraints. It can be a hole in the sales structure. It can be any number of things, but that's really where we spend our time and where we feel comfortable. There's a venture capital component to businesses that are that small, because so much of the overwhelming momentum of the business is highly concentrated in one or two maybe 3 if you're lucky, individuals who really provide that leadership and that management and that momentum. So it has a feel at the lower end of the middle market to be a little venture-ish, and I wouldn't argue with anybody who said that.
Okay. In your work at Lazarus Capital, is there any one thing you like to do more than anything else?
Absolutely. I love to go out and meet the entrepreneur. I love to meet the person who's founded this business, started this business, kind of pulled it up from the bootstraps of his own willpower. That's exciting to me because really that's the American dream. And that is what America's all about. It's about somebody going out, taking capital risk, taking opportunity risk, and really, pouring their heart and soul and time and life into a business. And however, what percentage makes it? You probably have better numbers on that than I do, but it's rare and it's a gift. It's a real art to be able to get it to something that's $10 million in revenue, and there are a lot of break points to get there.
Right.
But and a lot of opportunities to stumble. But that's phenomenal. And the people that you meet who've been able to do that are always interesting, and they're always in some interesting way inspiring.
Right. We hear a lot of talk today about a person's why. Why? And that's the question I'm going to ask you. Why are you so passionate about what you're doing?
Sure. It's really one of the last places where you can have the freedom to succeed or fail with your own decisions. There's so many opportunities to work for a company and do a great job. And that's different. To be an employee is different than to be a manager, and that's different. It's different to have the responsibility for however many people are surviving and getting a paycheck and living and hopefully thriving under that business. And that was why we were so excited about the first few acquisitions we did, because we really felt like there are 400, 500 families that have a job that would not otherwise. And sometimes that really bleeds over, maybe not in the same way, but in a similar way to the fixer-uppers. It may not be so much a question of whether or not the entire entity is going to survive, but how many people are going to survive, and who's going to have a real opportunity to have a great career and enjoy what they're doing and be a contributing member of the team. And that's what most people want. That's what I want.
That's true. Last question. Business owners watch our show for one of a few reasons. They want to enjoy a little more personal freedom, in other words, not spend all their time at the company, grow the company faster, transition ownership either to a third-party sale or internally. And then the fourth reason is sometimes business owners are having a hard time redefining their purpose after they leave the company.
Sure.
And you may see that too. If you could give them one tip, and it can be in any one of those 4 areas, what would that tip be?
I would say this. Spend time developing your management team.
Okay.
That is the difference between having a transitionable or transferable business and not having a transferable business.
Right.
It's the difference between a job and a business.
Right.
And it's not fun to spend that time, and we do it. It's not fun to spend time teaching that next level because they don't do it as fast.
Right.
They don't have the background experience to do it as well. But that's where your leverage comes from. And at the end of the day, somebody like myself, be it a private equity group guy or be it a strategic, another corporate entity who's looking to buy you because they like what you're doing, it's either complementary or it's the same, they're going to be evaluating the management team without you in it.
Right, it's true.
And so many times, the people who spend 3 years, 4 years, 5 years really working on cultivating and growing that management team, it's tougher. It's a harder 3 or 4 or 5 years, but at the end of the day, they've got something that they can really be proud of because, one, they've got a business that's worthwhile. Two, they've got the option at that point to either stay on and continue to own the business or to sell it. And thirdly, they can feel comfortable that that business is going to survive their departure, be it into a passive ownership position or into a sale position. So I would say, beyond anything else I could say, and I'm sure there's great advice out there, Spend that time. It's not fun. If you're not having fun, you're probably doing it right.
Okay, great. Okay, good interview. Thank you. That was Hewes Hall. He's with Lazarus Capital Partners. For more information about Hewes and his company, please check out the show notes for this episode on our website.